Welcome to another episode of Millennial Investing Explained. Here's today's question. We've talked a lot about equity crowdfunding. Let's shift gears a little bit and talk about some of the other fundraising tactics that you've used for previous startups. Can you explain some of the other fundraising strategies that you've used that you were successful with and how someone listening to the show might be able to replicate them for their own business?
Absolutely. Depending on what you're doing, you really have to figure out kind of what your trajectory is. If you're doing a business like, let's say you're opening another coffee shop and wine bar like mine, venture money is probably not what you're going to want to do. There's going to be a cap to some extent on what you're going to earn on that business, and maybe a loan or the SBA or friends and family that are going to do some sort of personal loan deal with you or invest with you is the right option, because you're not going to get a 10x multiple, and venture capital is going to take way too much. And honestly, they probably wouldn't invest in it. So, if you're doing something more like that, that's a great business. You can make a lot of money. That's one option. And then I would say where I enjoy playing the most and where I have put my money, I'm part of a venture fund. I'm part of angel networks. I have raised money from angel networks. I have raised money from VCs. I think that is probably for any business that I would say is scalable. So any software platform, any product that you can put a little bit of money behind and rapidly expand it and have good margins, that's when you really want to go to venture capital or angels. You're going to start with angels usually, unless you just have a home run idea or know people. You're usually going to start with angels, get a concept together, maybe generate a little bit of revenue, and then you'll be able to invite some of the venture capital players into that.
For people listening to this who don't know, what is a seed B or seed C round?
Basically, and this is not how every raise goes, but usually it starts with either a friends and family round or a bootstrap round. That means you go out and you get maybe $50,000 or $100,000 and you're building your prototype. You're saying, hey, I have an idea. I think there's product market fit. Let's build this together. And so that's really the friends and family round bootstrap part, when you're either putting the money in yourself or you're asking your parents or aunts and uncles or your rich second cousin on your mom's side, whatever it is, you're getting a little bit of money. If you start to prove that out, usually you go into a seed round. The seed round's usually a little bit bigger. You're talking maybe $100,000 to a couple $100,000. This is where you're showing that your product really does work more than your neighbor is using your lawn mowing business. You've got a couple people, whatever it is, and you're starting to grow. Then once you've shown that, hey, you can actually, your product works, people like it, and you can scale it, meaning you can, without a lot of money, be able to replicate what you've done. So the more people you have, your cost structure isn't going to change that much, meaning you're more profitable. That's when you go to the venture capital world. And that's when you get a Series A. So a Series A is just for a round of money that you get usually after the seed and friends and family round. And then that goes Series A, B, C, D, so on and so forth until I guess they run out of letters. I'm not really sure what happens once you get past that. But usually around Series B or C is where most people start to turn cash flow positive, meaning they're starting to actually make money. And you have a couple other options, whether you get acquired or whether you IPO or whether you get private equity investment. Every company is so different. So that's just a big generalization of generally the flow of how it works. But there's obviously exceptions and different paths you can take along the way.
That's all for this episode of Millennial Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.